The CI Munro Alternative Global Growth Fund returned 3.6% in the June quarter of 2021. This consisted of a 4.3% return from our equity positions and 70 basis points detracted from currency. Global equity markets had another positive quarter, continuing the strong rally that we've seen from the COVID lows. Market performance is basically being driven by rapidly rising earning estimates as market participants continue to underestimate the strength of the economic recovery and companies' ability to profit from it. From a stock attribution perspective for the quarter, positive contributions came from high-performance compute leader NVIDIA, from e-commerce winner HelloFresh, and from software megacap Microsoft. Detractors in the quarter included some of our higher multiple names in the Trade Desk, Uber, and digital enterprise company Twilio. We also had some losses on some hedging positions as we tried to hedge some of the volatility that we saw through the quarter. So as we sit here today, the second quarter results season is now upon us, and this should be the high point for the reopening's earnings growth we see in the market. And we think it's noteworthy to note that long-term interest rates and inflation expectations have actually stopped going up. And as we look forward, we now think investors will begin to shift their gaze towards medium-term earnings growth. And this should benefit our strategy. Our digital areas of interest where growth accelerated during COVID look likely to retain the shares that they gained. And whether it's hybrid workforces or groceries delivered online, we do expect these changes to stay and drive strong medium-term earnings growth for a number of these companies into the future. Outside of these digital areas of interest, we also see strong earnings growth for some of our emerging consumer names. And elsewhere, we also note that the global infrastructure policies are likely to benefit our climate areas of interest. And so to conclude, we remain generally positive equity markets. The backdrop of economic growth broadening and interest rates likely to remain structurally lower creates a good environment for our companies with the ability to grow well into the future.